broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Want to first start off by telling you all thank you for taking time out of your day to come join us on this webinar. I do have Carrie Freeburg with us. She is the product development manager over at Equitable, so she's going to be diving in to these products today, giving you some of the background on how they were developed, what the pricing that goes into the rates, and some of the features of them as well. So really excited and appreciate you taking time out of your day, Carrie, to join us as well. So you guys are in for a treat having her here sharing some of the things that we don't always hear about products. So I'm going to start off just by going through a few intro slides. I'm going to go through these pretty quickly. As you guys know, if you have questions, you can type them in, but just know that I will be following up with each of you individually later today, tomorrow, to answer any questions you may have on that. Also, I'll be throwing up a couple different poll questions, a couple through these intro slides, and one at the end, seeing if you want some information on Equitable's product line. So the quicker you answer those questions, the quicker we can get moving to the next slide. So just be mindful of that. We'll try and minimize your time away from your clients today. My name is Laura Johnson. I work here in the annuity department at IMES. If you haven't worked with me before, anytime you need help on any annuity cases, any design work, feel free to give me a shout. I'd be happy to help you out. So today we're going to be, like I said, we're going to look at Equitable's products, but I'm going to start with a few slides here on IMES. I'm going to start with our new producer bonus. We've got a couple incentive programs available for all of you. First one we've got available when you first join IMES. If you haven't got contracted with us or just recently did, you are eligible for this. You're eligible for this for 6 months, 180 days. So as you can see, there's 3 different tiers. Level 1, 750 cash, 2-year subscription to a website or the newest generation of an iPad. If you don't cash out at the 100,000 and go for 300,000, you can see that there's a bunch of other great options available there, including marketing reimbursement and cash options as well. We've also got our don't cash out there and you go to the $500,000 level. As you can see, we would pretty much pay for your coaching and your mailing for your first seminar with one of our 2 seminar coaches, or we can do some Ritz-Carlton travel rewards for you. I will mention there is a cash option and a marketing reimbursement option at that level as well. So some great opportunities. We really view this as a way to help you at those first few cases you write with IMES, help you get some additional marketing going to ramp up sales. Once you are done with your new producer bonus, you will move into our marketing reimbursement program. So for every 100,000 of index annuity premium you write, we put $100 in a marketing account for you. For every 100,000 of single premium whole life you write would be $200 into a marketing reimbursement account. And for every 10,000 of life target premium you write, it would be $200 as well. So some great opportunities there for IMES to partner with you on your marketing expenses. One other thing that we do have available for you is our referred producer program. As you know, referrals are very, very important in your business. Just as they're important in yours, they are important in ours as well. So for every referral, you enjoying the service you receive at IMES, you like the way we do business, send someone our way. We'll give you $50 when they get appointed. When they write their first piece of business, we'll throw you $100. And then going forward, you're always going to earn 20 basis points on all the business they write. We do this so that there's certain agents that don't maybe want to build a hierarchy or take on the liability of, other agents and maybe having back charges and stuff, chargebacks and stuff. This is a way for us to say thank you for that business without having you to have to take on that liability. And I will mention this doesn't come out of your commission. This doesn't come out of your referrals commission. This comes out of our pocket. So it's just a way of saying thank you. So if you have any questions as far as where you stand on the new producer marketing reimbursement, or if maybe you referred someone, want to make sure we have it set up correctly, give your marketer at IMES a call, give myself a call. We can double check all that for you. Here at IMES, it's part of our name insurance agency marketing service. We really not striving to be the biggest FMO out there, but trying to be number 1 when it comes to service. And that's going to go everywhere from, we say submission to commission, but really helping you with the case design. You've got a client not really sure which direction you need to go, want to bounce some ideas off of someone. That's where the marketing staff's going to come in handy for you, get you everything you need to write the material. And then Amber and her team take over the business once you write the case. If you send it through our office, we will scrub the application, let you know of any corrections that need to be made. And then once you've made those corrections, we'll be able to help you get those submitted to the home office. So really trying to help you through every step of the way. After the case has been submitted, our new business team will follow up on the business every 2 to 3 business days, just to see what's going on and keep you updated so that you're fully aware of everything that's going on in your case. We've also got a paperless contracting system. So when you do get appointed with IMES, you do your paperwork the first time. Once this is in the system, if you want to add carriers, take them away, you can do that without having to fill out more paperwork. I will mention there are a few carriers that there are an exception to, that maybe Equitable being one of those, where you do have to go online to complete their contracting. But again, we'll help you through that whole process, help you get all the requirements for training over to you, make sure you're all compliant to write the business. So really just trying to help you with as much as we can, be that back office support so that you can do what you do best, and that's being in the field. If you haven't worked with our creative department, Jacob, Sean, Aaron, they do a phenomenal job over there in the creative department. Anything from maybe you're new to the business and you're wanting to get a logo designed or help get business cards created, their team can help with that. I usually encourage starting with that and getting kind of a name for yourself developed. After that, then any marketing we do, we can apply your branding to. So maybe, you're re-entering the business, or maybe you're a Medicare agent looking to market to all your Medicare clients about offering life and annuity. Want to do a newsletter, we can apply everything we've done for you onto all the marketing we do going forward. So if you're interested in any of our marketing services, give Jacob, Sean, Aaron a call. They can give you an update kind of with what you've got in your marketing account. And if the branding is free, but then any cost that there is can be used with your marketing dollars. I will mention that they do have a price sheet that we can email out to you, kind of giving you an idea. If you compare it to any freelancer, any graphic designer out in the field, anywhere, it's a fraction of the price. So it's a great opportunity for you to get help with that marketing. If you haven't been to our website, it's on the screen there, www.imesinc.com. A lot of great tools out there. I'm not going to go through all of them. I'm just going to touch on a few favorites. If you go under the products tab, there's a life tab where you have access to a life quoting system. Same thing with the annuities. Under the annuities, you can do income rider quotes, check rates. We do have a relationship with Annuity Rate Watch, so you have access to that through our website. One of my favorite things though on our website, if you go under the support tab, is the sales resource library. What this is a whole bunch of things for you guys out in the field. I mean, anywhere from financial calculators. There's a lot of client presentations out there. Maybe you're talking with clients about a stretch IRA. Well, what's a stretch IRA? Well, we've got a documents client approved presentation out on our sales resource library that tells you about 10 pages of what you need to know about stretch IRAs. There's great materials out there. Also, there's a ton of fact finders, specific kind of fact finders. Maybe you're working on an estate case and you want a fact finder more focused on the estate planning. There's a fact finder for that out there. So a lot of great resources. If you haven't gone out there and checked it out, need someone to walk you through it, give me a call. I'm happy to help you. One thing I will mention, if you haven't registered on our website and you go to register, once you do register, it takes about, they say 24 hours. I'd say more like 3 or 4 hours, and they'll approve you, and that'll give you access to the website. We do have an RIA in this office, IMES Wealth Management. I'm just going to mention 2 quick things on this. If you do have your 65 or your CFP, you are able to be registered with IMES Wealth Management. I'm also going to talk about our soliciting agreement we've got available with IMES Wealth Management as well. I really view the RIA, having your 65, as a great way to be a complete financial advisor. Run into a lot of situations where clients maybe have 500,000 and maybe Equitable is only going to take 350,000 of it. What are you going to do with that other 150,000? If you're leaving it on the table, you're just asking for another financial advisor to come in and potentially take over your client. So I think it's a good way to be able to offer your clients all the services. Now, for some people, they've maybe had this in the past, don't really want to have to go through the testing again. That's why I mentioned our soliciting agreement. Depending on the state that you live in, we could register you with IMES Wealth Management as a solicitor, meaning that you could refer your clients over here. Depending on the state you live in, we could actually possibly pay you a portion of the fee that is charged to your client. So good way for you to kind of build up some clients there and maybe make a little extra money on that side, but then also, knowing that the money's safe and that you don't have another financial advisor coming in there to possibly sweep that up. If you are studying for your exam and you want to refer clients over as well, do that. And then once you get registered, all those clients will be transferred right over to you. So some great opportunities there with IMS Wealth Management. So with that, I'm going to throw the first poll question up. If you are interested in getting a little more information on our RIA or our soliciting program, go ahead and answer yes to that question. What that'll do is generate a phone call from Mike Hansen in our office. He will give you a call and can answer any questions you may have in regards to either of those things. So if you guys could get that question answered, we'll go on to the next slide. Alrighty, I'm going to go ahead and close that. Next slide, one of my favorite things is our training. For training is our life and annuity academies. We do these 3 to 4 times a year. Partner with one of our home offices. The next one's going to be here in September, the 18th through the 20th. We're going to be holding it up in Des Moines, Iowa at Athene's home office. So we will cover all expenses as far as flights, meals, hotel. I will mention this isn't necessarily for the newer producer to the industry. It's going to be more advanced than that. It's really for the seasoned producer who's active in the life and the annuity market and looking to increase their sales. We're going to bring in some of our top producers. They're going to share their marketing strategies, some of this, whether it be their seminar, radio, some niche products that they've added to what they're doing, some infinite banking opportunities that will be talked about, really giving you some unique ideas, things to help you grow your business. The goal is to get you fired up and excited and ready to go back with a marketing plan and help you grow your business. So again, really for the seasoned producer, if you are interested, I'm going to throw another poll question up. If you can't maybe make this one, if you still register, we'll carry over to the next one. This will be the last one for 2019. So if you are interested, go ahead and answer yes, then we'll send you out the pre-registration link. This doesn't necessarily guarantee you a spot. You can imagine, we get a lot of interest for this, a lot of interest, and we can only bring about 40 people in at a time. So if you're active in writing business with IMS, that's going to help your case. But if it is a great opportunity, every agent I talk to that's come into one of these has gone back and written a lot more business because of it. So it's really a good opportunity. Alrighty, and just actually at this point, I'm going to hand it over to Carrie, and she's going to jump in and talk a little bit more about some of the Equitable products. So Carrie, again, thanks for joining us, and the time is yours.
All right, perfect. Let me go ahead and move my screen over. Make sure, is all that looking okay, Laura?
Yep, looks great.
Okay, perfect. Okay, well, thank you so much. I'm excited to be here with you guys today to talk about Equitable and really focusing in on our Teton Series. As Laura said, I'm in the product development team. I'm the director of product development. I am an actuary, but today we will be keeping things high level, going through kind of the marketing of the product, but also letting you guys in kind of behind the back door, so you guys can learn a little bit about why we designed the product the way that we did, as well as our plans for managing the product in the future as far as renewal rates and things like that go. So let's go ahead and get started. A little bit about us. We may be a new company in the indexed annuity space, but Equitable is not a new insurance company. We've actually been around since 1935, and we are Utah's oldest active life insurance company. One thing that I always like to point out is that we are solely focused on independent agent distribution. And I think that that's something really important to point out, because what that means, you guys, is every procedure, every policy, every form, every product that we design is solely for you guys, okay? Where products are a little different in different distribution channels and whatnot. So we work very, very hard at being a company that, protects ourselves properly, but also making sure that we are a very friendly company for you guys to do business with. And I hope that as you get started working with us, that you feel that coming through in all of your conversations with every department, with new business, with policy owner service, with everything. So a little bit about us. We are licensed to do business in 46 states as well as the District of Columbia. I know the big blue state over there on the left, California, we are actively, literally having back and forth with them on a regular basis. So we are very optimistic that we will be able to do business in California by the end of this year, hopefully even sooner than that. Same thing for Minnesota. We're working with them right now. And we hope to be good to go there by the end of the year as well. New Jersey, the only other blue one, will be coming a little bit later. So, all right, so real quick, let's run through a few details about Secure Savings. This is our MIGA line that we really started in February of 2018. But in July of 2018 is when this product, so a few changes in the market happened and this product became pretty competitive. And we've just had tremendous success with our MIGA line. For the first quarter of 2019, Secure Savings line was actually ranked number 4 for the top selling product in the first quarter. And Equitable with all of our MIGAs was also ranked number 4 as a company. So that is really exciting. And I guess let's look at a few of the details so you can see why it's been so successful. We have 2 MIGA lines. We have our Secure Savings line and our Elite line. Both lines have 2-year and 5-year products. Secure Savings can be written up to age 90 for a minimum premium of $10,000 and a maximum of $500,000. We are open for business though, so if you have cases larger than $500,000, fill out our large case approval form, send it in, and we will work on getting that approved. The Elite series has a few product differences that we'll get into, so it can be written up to age 85, but the same premium requirements for it. Here are our July rates. One thing I want to point out, these rates dropped actually 10 basis points across the board July 1st. We held our rates until that drop of a couple weeks ago. Actually, since July 15th of 2018, we held these very consistently competitive rates. I want to point that out because I want you guys to know that Equitable is here to be a long-term, consistent partner with you guys. We are not hopping in the market trying to disrupt it, hit a sales number, and then back out and be uncompetitive for a couple months. We are here to stay. And with how long we held those rates consistent is really a true testament, showing you guys that's exactly what we're looking to do. And every rate change that we make, it's something that we look at very, very heavily, and we make sure that we need to. We try to not do knee-jerk reactions to economic changes. We try to make sure that when we make a change, it is because there's been a long enough change in the economy and bond rates and whatnot that we really need to. So that's kind of our philosophy there. So our 2-year has a fixed rate of 2.75% guaranteed for 2 years. Our 5-year has a rate of 3.9% guaranteed for 5 years. With Secure Savings, all the liquidity benefits are automatically built in. RMDs are available right away. Interest-only withdrawals are available right away. And 5% of account value withdrawals are available starting the 2nd year. And the death benefit is the account value. The Elite series, what we did here is we said, you know what if you don't need all that liquidity? And what if you're pretty healthy and you're comfortable with the death benefit being cash value and spousal continuation? What if we pull those benefits out? What rate could we get you? And when you think about the 2-year, can someone actually set their money aside for 2 years and not have to take out withdrawals and not need that account value death benefit? Look at that. When we pulled that out, we were able to get the rate from 2.75 all the way up to 3.1% on a 2-year product. And then if someone wants liquidity, they can add in the liquidity that they want, that they need. They don't have to get that rate. They don't have to drag down that rate to pay for all the different liquidity provisions. So if they need RMDs, they can add in RMDs and their rate drops 10 basis points from 3.10 to 3%. If they want interest only, that's 6 basis points. And if they want that 5%, that's 6 basis points. Here's the super cool thing. You can add none of these riders. You can add 1. You can add 2. You can add all 3. If you add all 3, what that means, you guys, is you can actually take out an RMD withdrawal in a year. In addition, you can take out an interest-only withdrawal. In addition, you can take out a 5% of account value withdrawal, and all of a sudden you have an itty-bitty 2-year product with a phenomenal rate, and it is one of the most liquid products in the industry. So definitely want to point that out. Take a look. I know the 5-year market is the gigantic MYGA market, but don't forget about these 2-year products. They can work really well for laddering and all sorts of different case building. Its sister product, the 5-year Elite, it has a rate of 4% for 5 years. Now, we pulled out liquidity to get up to 4%, but because that rate difference, 390 to 4, just isn't so big, we don't really have the liquidity riders on here. If someone does want liquidity, at that point we say, go ahead and hop over to Secure Savings 5 and purchase the 5-year product that has all of those different liquidity provisions built into it. One thing to point out, the Elite Series, like I said, the death benefit is cash value or spousal continuation. So a spouse can step in and continue the policy if the other spouse passes away. So these products, the green states are where all 4 of those products are approved, and then we have 7 states where Secure Savings and Secure Savings 2 and 5 are the only ones approved. And we just released the Elite Series in Montana, June 24th. And now we'll move on to Teton. I always just love looking at that picture. Just so you guys know, the Tetons, if you're not familiar with them, they're a beautiful mountain range in the state of Wyoming. And one of the unique features of the Tetons is that they are still growing. So as we were planning on coming out with this accumulation indexed annuity line, we thought, what a great name to tie this product line to, a mountain range that is, the strength of a mountain, as well as the fact that it is still growing, just like an accumulation product should do as well. So when we started making plans to enter the indexed annuity space, when we started making the plans for that last year, we saw how mature the space has grown and how complicated some of the products are out there. What we wanted to do is we wanted to enter the space with a very clean and simple product design, almost taking you back to kind of where we started with indexed annuities. And like 12 or so years ago, back when, before income riders came out, one of our main value propositions for an indexed annuity was that you could never go backwards, right? So if you met with your client and the market tanked last year, you knew you were coming with great news and that they got a 0, right? And the 0 was fantastic. Well, now all that still exists, but we might have rider fees for all of these great income riders that are out there. So now you talk about, well, you got a 0, but then we had, a point come off or whatever to pay for the income benefit. We wanted to kind of get away from that, and we wanted to say, okay, let's just do accumulation and let's do it really well. So with that, we kind of removed any sort of distractions that can complicate the story. And we wanted to be laser focused on industry leading performance. One thing you're going to see over and over from Equitable is we do not do jack of all trades anywhere. We are laser focused on the independent agent distribution. We are laser focused on providing great guaranteed interest rates on the MYGA. We are laser focused on providing industry leading accumulation on Teton, and that's what we do. We try to pick something, we want to do it really well as opposed to doing a bunch of things okay. Just like we've been so consistent in the MYGA space, we want to bring that same consistency over to the index space. So what you're going to see from us is consistent rates. Now, as bond rates change, just like every other company, we'll have to make changes too. But again, we take it very, very serious, and we're not going to make gigantic changes. We'll make incremental changes when necessary. And I'll get into the pricing of the product a little bit so you guys can see what our plans are for renewals. But again, we want first year renewals, everything to be very, very consistent. And we're even planning on publishing our renewal rates once we get to that point, once we have our first set of renewals. So with Teton, it's one line. We talk about Teton, but it's really 2 product series. You have the Teton 7-year, 10-year, and 14-year products. Those are all our kick butt accumulation products. And then you have Teton bonus 7-year, 10-year, and 14 products as well. Everything is the same between these 2 product series. Commissions, all the product features. The only difference is that Teton bonus is a bonus. So to pay for that bonus, the caps, participation rates, etc., are a little bit less. The only difference. You're essentially indifferent between which one your client purchases, and it's really just a choice. Does your client need that immediate interest boost for Teton bonus, or do they really want the best caps that are out in the industry? So here's how they look. The 7-year products can be written up all the way up to age 90. The 10-year products can be written to age 85. And the 14-year products can be written up to age 80. The minimum premium is $10,000. We do allow additional premiums for the first 12 months. These additional premiums are fully commissionable, and the full premium bonus applies to them as well. The minimum additional premium is $2,000, and our maximum total premium is $1 million without home office approval. Again, we are open for business, so please fill out a large case approval form, and we will work on getting that approved. For those additional premiums, they are allocated the fixed interest strategy for the remainder of the first policy year. Again, that full bonus, full commission applies. After that first policy year, once we hit that reallocation period, that is when those funds are reallocated to the index crediting strategies, if that is what you and your client decide. All right, let's talk about the main part of our story here today, and that's accumulation. At this point, all of our accumulation engine is powered by the strength of the S&P 500. We actually have a great piece that I encourage you guys to check out on our agent portal that is called How Your Annuity Will Grow. And it details what the heck the S&P 500 is. You know, with all the different indexes out there, we have pieces about what is this index and what is that index. But at the end of the day, the S&P is the benchmark of the U.S. equity market. And that is what this piece gets into. It talks about what the biggest holdings are, how our company can even qualify to be included in the S&P 500. Gets into all of those details. It is client facing. And it also explains our 6 index crediting strategies that we offer as well. Again, this is client facing, so you can show your client how an annual point-to-point cap works, as well as an annual point-to-point participation rate. All strategies that we are talking about today are all 1-year crediting strategies. Again, we are not playing any games here. We're not making people wait 2, 3, 4 years before they can get an interest credit. And we have no fees associated with anything. We don't have any sort of indexing buy-up fees or anything like that. So here are the rates for the month of July. And just so you guys know, we are in the process of setting rates for the month of August. So you guys will see if there's any changes to those rates in the next week or so. I always like starting in the 7-year because, gosh darn it, everything else just keeps getting better. Again, remember, this is Teton, so these are going to all be our biggest caps and rates on this line. So the 7-year, you know, our fixed rates are great just by themselves. Fixed rate of 3.25, and then it goes up 3.5 for the 10-year and 3.75 for the 14-year. And then on this little itty bitty 7-year, we have a 6.25 annual cap, a 50% participation rate, 50% participation rate on the straight up S&P 1-year bucket on a 7-year product. Monthly cap of 2.25, and then we have 3 different monthly average buckets. I always like to point that out because I hear a lot of agents are used to seeing monthly average with like a participation rate and a spread. It's not what we're doing here. Someone can choose to allocate to monthly average with a cap, or choose to allocate to the participation rate or to the spread. That each of these buckets at any point in time will only have one adjustment, and that'll be the monthly average cap strategy will only have a cap ever apply to it. Participation rate will only have a participation rate ever apply to it. So I just want to point that out. So then we move on to the 10-year. The rates just get better. We have a 7% cap and a 50% participation rate, 2.5 monthly cap, which I think is one of the best ones out there without a fee. And then we have phenomenal monthly average buckets. And then the 14-year, which is my favorite product and actually the one that I purchased, has a 7.25 cap, a 60% participation rate. That's my favorite bucket. I absolutely allocated to it. And then we have these great monthly average buckets, double-digit monthly average cap, 95% participation rate, or a 50 basis point spread. And again, these are all based on the straight up S&P. We're not talking volatility control here, and these are all 1-year strategies. So then we move on to Teton bonus. Everything looks pretty much the same, but we have this premium bonus. 7-year is a 5% bonus, 10-year is a 7% bonus, and the 14-year has 10. What you didn't hear me just say is that these bonuses change by issue age. That's correct. All the way up to a 90-year-old can get a 5% premium bonus on the 7-year. Everyone all the way up to age 85 gets a 7% bonus on the 10-year, and everyone up to age 80 gets a 10% bonus on the 14-year. And then you see that the caps are a little bit less, but you guys, these are still great caps for a bonus product. When I kind of study competition, I see that there is a big trade-off between what I kind of talk about as accumulation products versus bonus products. And a lot of bonus products, especially when you get into 10% bonus products, you start seeing 3% caps out there. Not with Teton. With Teton, it is not a trade-off. With Teton, you can get a bonus and accumulation. It is not one or the other. So even out here on the 14-year, you get a 10% bonus, a 3% fixed rate, 6% cap, and look at that, a 50% annual point-to-point participation rate. So you absolutely have accumulation potential as well as the upfront premium bonus too. So when we designed this product, you kind of heard me talk about how we wanted to be laser focused. Part of that was we removed all product drag so that we could get the best caps out there. We had the privilege of getting to design this product without having old policy forms, old filings that we had to work with. We got to do all of this by scratch. Literally, I typed every period on every policy form. So we literally did it by scratch. And as we were thinking about this product feature or that product feature, we always went back to, does this help our caps or hurt our caps? Does this help marketing or hurt marketing? And if something helped our caps and did not hurt marketing, we looked at those product features very, very, very closely. So an example, you haven't heard me say a single thing about an income rider, right? We don't have one on here. Again, we're not trying to be something for everyone. We're trying to do accumulation very, very well. And you know what? If I came out with a crappy income rider that you didn't care about, that didn't help your story, it would pull down our caps because that uncompetitive income guarantee would pull down our caps a little bit to pay for it. So we chose not to. We said, you know what, we will do income another day and we'll do it well another day, but not today. Teton's going to do something a little bit different. We also are using what is called a level option budget pricing philosophy. I'm going to walk you through an example. So on Teton 10, just everything simple, on Teton 10, our fixed rate is a 3.5%, okay? You can think of that as our option budget. So what we do is we go out and we say, okay, what kind of annual point-to-point cap does 3.5% buy me today? And today, it buys me a 7% cap, okay? Next year, upon renewal, guess what we're going to do? We're going to take 3.5%. We're going to go out, we're going to see what cap it gets me, and that is going to be our renewal cap. The key thing here is every single year, we are spending 3.5% on options, okay? So year 2, we're spending 3.5%. Year 10, we're spending 3.5%. Year 14, we're spending 3.5%. And what that means is your caps, your participation rates are going to be so consistent, you guys. 3.5 next year, it might buy me a 675 cap. It might buy me 7.25. But you know what? It's going to buy me something very, very similar to 7. And you know, it won't buy me. 3.5 is not going to turn into a 3.5% annual point-to-point cap, okay? You're not going to see changes like that unless all hell breaks loose in the economy, and everyone's going to be looking really weird, okay? So what you're going to see from us, I'm not saying you're going to see a 7% cap every year. What I'm saying is you're going to see something very similar to a 7% cap every year, and that is actually in our model. That is what we are planning on doing. That is what everyone at the upper levels is talking about, what the plans are for Teton. And in fact, we are planning on publishing that renewal rate history once we get there, like I said. So that's kind of the pricing mentality of it. Please, let us know if you have any questions. Laura can get a hold of me. I'm happy to talk to you about it more. But I think you guys are really going to like what you see with this, when you get into year 2 and year 3. And I know a lot of insurance companies actually price in lower option budgets come year 3 and year 4. You guys are probably very used to seeing that, where all of a sudden you're like, dang it, this cap was 5 and now it's 3. What happened? chances are the option budget that they're using actually changed at that point in time. The other thing we're doing is we're focused on the S&P. You know, the S&P is so transparent, it's so well known, so that's fantastic. But the other thing about it is the option market on the S&P is the most efficient option market out there. When I take 3.5%, I get the most bang for my buck going to the S&P. I get the best cap for my buck going to the S&P. Other indexes have licensing fees and different things that come into play that, again, puts drag on the product. So again, this is one of the reasons why we went with the S&P to start. And we are looking at other indexes potentially, but we have very strict rules for what is acceptable to us to kind of keep everything we're talking about, the efficiency and all of that, to continue, even if we look at other indexes in the future. With all of this, again, level option budget, S&P, product drag, all of this is to make sure that the Teton is very consistent for you guys, so that every month as you're working with new clients, you know that Teton is pretty consistent, but it's also consistent for you long-term with policyholders that you place with us, that you trust to us, that, you know, their renewals and the product is very consistent for them long-term as well. So with that, let's move on to liquidity. Free withdrawals. RMDs are available right away, just like on secure savings. 5% of account value is available starting the second year, just like on secure savings. I will point out, we were planning on doing 10% free. And then when we switched to 5% free, you know what that did? It increased our caps. So we decided, let's go ahead. This is an accumulation product. Let's go ahead and do 5%, up those caps a little bit. We didn't keep it. We put it back into the product. Because what we know is few people really take out their 10% free withdrawals. We know that it's a good peace of mind and it's nice to have it, but we know few people actually utilize it. So we went with 5%, and then what we added is a cumulative withdrawal feature that goes all the way up to 30%. So what this is, if someone doesn't take out their 5%, they can carry it forward to the next year and take out 10. If they can't take that out, they can carry it forward and move on to 15, all the way up to 30%. So what this means is if your client has something that comes up and they haven't been needing to take out withdrawals for a couple of years, they're going to have a great free withdrawal amount that they can take out that will actually help them in their time of need, okay? So that's kind of where that's coming from. For annuitization, people can annuitize the full account value on the 7 and 10-year products after 5 years, and the full account value on the 14-year products after 10 years. Additional liquidity, we have check these out, guys. We have home health care riders, nursing home riders, terminal illness riders that all have waiver of withdrawal charges at the time of need for your client. So hopefully we're there to help them as life changes happen, and none of these riders have any sort of issue age requirements on them. They do have waiting periods and qualifications and things like that, but they're available for all the issue ages that the products are available for. All of these benefits include the premium bonus if Teton bonus was purchased as well. Pretty easy on wealth transfer. Full account value is available at death, spousal continuation as well. Again, if Teton bonus is purchased, that premium bonus is included in that death benefit because it's in that account value. The withdrawal charges, so the 7-year and 10-year products have withdrawal charges that start at 12%, and the 14-year product starts at $14.75. These withdrawal charges going up to 12 and 14 maximize the caps and participation rates we can offer as well. You guys all know that we have some states that don't allow us to do that. Texas, Ohio, Pennsylvania, Washington, Oregon, Missouri, South Carolina, we have withdrawal charges starting at 9.3% in those states. Commissions all stay the same. The rates are just slightly lower in those states where we have lower withdrawal charges. Also in those states like Texas and Ohio, et cetera, the 14-year product will not be there because they don't allow us to go up to 14 years in those states. For the bonus product, same withdrawal charges. This just also shows the premium bonus recovery schedule. You can think of it like a bonus recapture or a vesting schedule, same exact thing. You guys, it only comes into play if someone does something where they get hit with a withdrawal charge. Again, it doesn't come into play for death, doesn't come into play for free withdrawals, doesn't come into play for annuitization after those periods of time I walked you through. It's only if someone takes out, does a full surrender or something like that where they get hit with a withdrawal charge. One thing I want to point out is on Teton Bonus 10, for those states that have the 9.3% schedule, the bonus is 5% in those states instead of 7%. All right, now we get to talk about how you talk about our accumulation. So we have a great illustration system. I encourage you guys to go check it out. We actually built this in-house. We went a little different path than what other companies do using a vendor. We built it in-house, so it's clean, it's streamlined, it looks great. I think it gives you what you need quickly. So we'll take a look at it here in just one second, but I want to point out something I think that's pretty cool in it. So I know that in my old life, I used to run illustrations, see the competitiveness of all the different insurance companies, and a lot of times I'd have to run like 15 different quotes to figure out how each strategy looks and which strategy I'd want to go with. We just tell you guys. So in every illustration, you'll see this screen. I'm going to blow it up here in a second. So we show you guys the last 10 years how our different crediting strategies would have performed. So on Teton 14, annual point-to-point with a cap would have had a 502 effective yield for the last 10 years. Participation rate 702. So you can kind of see how they would have performed and then see how you want to allocate the premium. And we also show you that for the worst 10 out of the last 20 years, and you can see how the different crediting strategies would have performed. And then for the best 10 out of the last 20 years. And so here you can see, holy cow, we absolutely have accumulation in an indexed annuity. We have over 8% effective rates of return. And again, I want to remind you guys, you're seeing these rates. These are not roll-up rates. These are not income rates, okay? These are accumulation rates that hit the account value. Greater than 8%. And again, these are all one-year buckets on the straight-up S&P 500. Don't let your mind play tricks on you and think back to volatility control, 2-3-year buckets. That's not what we're doing here, okay? So anyways, you see all that, and then you can decide how you want to allocate. And I'm actually going to walk you guys through running a quote real quick. Don't get scared. It is so fast. So it looks like I have to log back in real quick. Hope you guys can see this okay. I think it's working okay. Okay, so on our agent portal, right on the main screen, you can do run an illustration. I'm going to just type it in. We'll just stick with that Teton 14 that I was looking at. And if you have a joint owner, you enter it in. If not, just keep on going. If you have additional premiums, you can put them in there. We'll go ahead and run qualified money. And this is where you allocate. So we just saw point to point with participation rate looks killer on Teton 14. So I'm going to allocate there. And then, so I said we don't have an income rider, right? We do let you illustrate withdrawals though. So we let you illustrate that 5% of account value. You can even illustrate 3 or 4 if you'd like. We let you illustrate a flat withdrawal amount, and we also let you illustrate RMDs. And we're going to walk through some cases. You're going to love Teton for RMDs, you guys, for all that case planning. Just do me a favor, just run a Teton quote and see how it compares, okay? I'm going to keep this as none for this one, just to show you guys how this looks. So you enter in that information. That was super quick, and we give you this cool landing page that gives you the information you need to see if this is the quote you actually want to do, okay? So here it tells me how I allocated, and then it shows me based on the last 10 years, the low 10 out of the last 20 years, and the high 10 out of the last 20 years, how the account value would have grown. And at the end of 10 years, we see that if we had a crappy indexing period of time, our $100,000 would have grown to almost 147. For the last 10 years, it would have grown to 197. And for a great indexing period of time, it could have more than doubled to 219, okay? So right there, you can kind of see how those look. They're all interactive. You can scroll over them. And then we show you the interest credits behind that. One thing I like that we point out here is we actually show you what the S&P did as well. I don't worry about, I like looking at the last 10 years, but the one I really focus on is the low 10 years. And here we see the market, the S&P, would have had an effective loss of 6% every year for 10 years. And Teton 14 would have provided an effective yield of 393 over 10 years. Okay, this is why our industry exists right here. It's great that we can capture a good portion of the market, 70-ish% of the market over here, but this is the value that we're providing. When something like this happens, we have a 47% loss, that zero makes such a difference. And so anyways, we have these numbers on here so you can go through them with the client if you would like to. And then here's the charts I just walked you through, where this tells you how the different crediting strategies as all the different yields, no matter how you allocated, put in there. Then we get into all the ledgers. And then if you like what you see, you can generate the illustration by hitting PDF, or you can go back and you can say, you know what, let's go ahead and pop in withdrawals. And you go ahead and do that, and then you just run it, okay? It's pretty straightforward. I'm going to switch back to my PowerPoint, though, and we're going to go through that with a few case studies. So let's look at the one we just looked at, okay, and let's dig into the ledger. So here is someone, we're not taking out any money. We have a 6-year-old, they're just letting it ride, okay? Their effective yield is at 702 we just saw for the last 10 years. So we show that right there. One thing I like to point out, remember we have no fees, okay? So that 702 is actually our engine of Teton, and it is the effective yield of these interest credits for the first 10 years that we're showing right here. I really like the last 10-year scenario. I like it because we have 3 zeros, we have some decent hits, and we have some really good hits. And that is exactly how I expect a typical 10-year period of time to play out. So I actually feel like we're setting reasonable expectations with our illustration right now. As an insurance company, we kind of we have to go by how the NAIC does it, and some 10-year periods of time are fairly common periods of time that can kind of keep happening, and then others are kind of weird. And so I'm excited that this one is a good 10-year period of time. Again, I like it when we're able to, I think, set reasonable expectations with policyholders. So that's the scenario we're looking at, and that is what generates the $100,000 growing to 197. After 20 years, it's almost quadrupled to 388, and then it just continues, okay? Now, let's add in some income. Let's look at RMDs. We still have our 60-year-old, so at 70.5, they're going to take out RMDs. We still have that 702 engine, and we start taking out RMDs now. 7192 comes out in year 10. As expected, our 197 account value dropped to 189. Here's where it gets pretty interesting, though. We take out our next RMD. It's 7165. But we get a big ol' interest credit of 1407. And what happens? We took out money. In fact, we've taken out 2 years worth of RMDs, and our account value has grown. I encourage you, I challenge you, go out and see how many other companies' illustrations do this. We have now taken out 2 years of income, and this is the highest account value that we have shown on the illustration. And it is not just a 1-year blip, you guys. We keep going, and all the way out at age 90, 20 years worth of income. People have received $284,000 of income. You're thinking, okay, our account value is 0, right? Most companies it would be. You guys know we're at $224,000 of account value still, and that is 100% because this is an accumulation product. And when you have a true accumulation product, it makes illustrated income and death benefits and account values and cash values and all of that great because the accumulation is the driver and it's not being weighed down by all of these other things, okay? Don't get me wrong, this is illustrated, right? This is not the guaranteed page. But if indexing, works out for us, you can have some phenomenal numbers on here. And at the end of year 90, so what we have is we have this column that shows total benefit. What it is policy, client, you gave us $100,000, okay? We have this column that says every year what you would get back in the form of income as well as remaining death benefit. So for this 60-year-old who's now 90, they would have received $284,000 as income, and they still have an account value death benefit of $224 for a total benefit to them of $509,000. So it kind of puts those together so they can see, they essentially have a benefit that's 5 times the premium that they gave us. And it keeps going, you guys. Even when we go all the way out to age 110, which is what we have to show, they would have received $661,000 of income. You guys, we still have a little itty bitty account value left. Again, the power of accumulation right there. Last study I'm going to show you guys, just so you know, we're not just an RMD solution. If you just put in annual withdrawals of $9,000 starting out every year. Similar story. We have our strong effective rate of 702. We start our RMDs. We see our account value drop at first. Then we get these interest credits and we see our account value grow. And at age 90, the client would have received $189,000 of income and have $352,000 left in their account value. So please, pop us into some of your casework that you're doing and just see for yourselves how the numbers compare to other illustrations that are out there. And then, okay, real quick, I know we're almost out of time. The Teton 7-year products are available in 39 states, and we just released Indiana, Mississippi, Nebraska, Rhode Island, and Wyoming at the beginning of the month. And we are working on those last couple states as well. Same state approvals for the 10-year. And then our 14-year is currently in 27 states. This one will ultimately be approved in about 33, 34 states. We're still working on those as well. Like I've said before, we work very hard at making sure that it is as easy to do business with us as it can be. So we have a lot of forms out there to help you guys. We have a suitability pre-qualification form for all those questions. Would you guys consider a case like this, a case like that? Fill out that form, send it our way. We'll get an answer to you very, very quickly. You can purchase all three, the 7-year, 10-year, and 14-year Teton products on one application. Again, why not? If you guys want to do some laddering strategy, just get one set of signatures. We don't need multiple ones. You can purchase all 3 Teton bonus products one up. In fact, you can actually purchase all 4 secure savings products, the Elite and the secure savings, on one application as well. I mentioned we have our large case approval form. We have a great financial strength document. You see a screenshot of it right here. We are very, very transparent with our financials. We update this document on a quarterly basis. It walks through our capital, surplus, what our numbers have been, what they are now, walks through all of that. Again, very, very transparent, how our assets are broken down, all of that. Take a look. Let us know if you have any questions. I mentioned how your annuity will grow. We even have pre-approved client ads where you can dump in your contact information as well and use that with your clients. Last thing I'm going to mention is we have a great trip to a pretty unique destination, Nevis and the West Indies. We're staying at the Four Seasons. Looks phenomenal. Qualification period started in April. It continues through March 31st of 2020. Actually need to change this. It's based on issued premium of $3 million over that period of time and a minimum of 10 cases. We really want to reward people that are consistently doing business with us. So that's where that comes in. Teton and Teton bonus premium counts at 100%. Secure Savings Elite counts at 100, and Secure Savings counts at 50%. And the trip is next June 2nd through the 6th of 2020. That's what I got for you. Thank you, you guys. I'll turn you back over to Laura.
Well, again, thank you, Carrie, for joining us and diving into the products with us. I'm going to throw up one last poll question here. If you are interested in getting some information on the Teton bonus, and the secure savings, if you answer yes to this, you'll receive an email later from Allison Campbell in my office. She'll email out all the details to you. And then, like I mentioned, I will be following up with each of you individually over the next 48 hours to answer any questions you may have as well. So we really appreciate you taking time out of your day. We're really excited about these products and look forward to doing a lot of business on them. So again, thank you, Carrie, and we will talk to you all soon.